Welcome back to my channel. So today I'm going to be doing a highly requested video about taxes on shares. I really want to focus on the capital gain tax on profits from shares. I won't get into losses in this video. That might be another video, but at this time I want to get on to basically the taxes you have to pay on profits you make from your shares. First things first, this is going to be very focused on on Ireland. I'm from Ireland, so it will be mostly focused on Ireland, although I think you can apply it to mostly any country in Europe. Second thing is, I'm not a financial advisor. Please don't take my word as 100% correct. I'm going off based on what I read on revenue.ie. If I made a mistake in my calculations, my bad. Let me know in the comments and I can correct it and upload the correction because I want this to be a nice resource for people because I know it was very confusing when I first get into this. Let's get started on our very complicated journey. So what is capital gain tax? Capital gain tax is basically applies to any profit from the things you sell, right? It actually applies to losses as well. Losses are a whole different ballgame, but essentially a TLDRs is you can offset losses against capital gains tax. So basically you can use some of your losses to pay less capital gains tax. I'm not going to get into that in this video. The standard capital gains tax for an individual person in Ireland is 33% on any gains you made. Each year, you have a personal exception of 1,275 euro per year, right? So if you earn anything above that from selling shares, you will have to pay tax on it. I am going to go through a few examples in this slide, but before I start, let me give a brief overview of capital gains tax on shares, right? A gain is the difference between the price you purchased the stock for and the price you sold it for. Capital gains is calculated on the difference. For capital gains tax on shares, there are mainly two scenarios. There are a bunch more, but I'm going to focus on these two, right? And these are, I think, two of the most common. Shares you bought all at once, and then you sold any amount thereafter. So basically, you bought 500 shares of company X, and then you sold, let's say, 500. I sold all your shares, I sold the profit of them the year after. The other more complicated version of this is shares you bought over a period of time. So, for example, imagine you bought 1,000 shares in company X in 2018. You bought 500 shares in 2019, and then you bought 200 shares in 2020. Then you sold any amount of them, making a profit. That's where things get a bit more complicated, right? So, but let's start off with a simple example. Here's a simple example. You're buying shares of company X at one time, let's say in 2019, and you're selling some of the shares of the same company at another time in 2020. So in this case, we bought 1,000 shares of X company for €1 per share, and we sold all of the 1,000 shares in company X for €3 per share, right? So basically we made 100% profit. The capital gains tax is the sold price minus the purchase price. That's your gain, and then 30% of your gain is the capital gains tax. Oh, that's without the exception. Most of the examples here are going to be without the exception because that depends on the person and it depends on how much selling you're doing during the year. So in this case, we have 3,000, which is our initial stake, which is 1,000. Oh, sorry, 3,000 is our profit. So that's 1,000 at €3 minus our initial stake, which is €1,000. That's 2,000, right? So we have a gain of €2,000. So 33% of €2,000 is 660 capital gains tax. This is what you have to pay to the revenue. Now this is without a yearly exception, right? So this is a very simple case. You bought once, and then you sold any amount of them at a certain time. Now in this case, we sold all of them, but you don't have to sell all of them. You could have sold like 50 of them or whatever. But if you have any profit, you're outside the exemption, you'll have to pay capital gains tax. The second example is, let's say you're buying shares of company Z over 3 years, right? And you sold some of the shares of that company Z in the fourth year. So here's an example, right? So we bought 2,000 shares in company Z for €1 per share. We bought 4,000 shares in company Y in 2019 for $150 per share. So now we have 6,000 shares. In 2020, we sold 3,000 of the shares, not all of them, that's the most important point, in company Z, in the same company, for €166 per share, right? So basically 166 by 3000 is about 5,000 euro, right? You have income, right? This is where capital gains gets very, very complicated. Basically, what happens now is because we only sold some of our shares and we bought shares over a different time at different prices, we need to apply the FIFO rule. FIFO rule basically means first in, first out. Shares that were bought first are sold first. Now that might say, how do I know which ones I bought first? There's no ID to them. Basically, it means the price at which the shares were bought first purchased are used in the capital gains tax calculation for the purchase price. And again, when you sell them shares, the next shares you bought first, whatever first ones are next, goes on to the next, right? So as you said, we're going to sell 3,000 shares. 2,000 shares are taken from 2018, which in 2018, remember, we bought 2,000 shares. So all of our shares from 2018 are gone, following the first in, first out principle, right? We bought them at €1 per share then, so that's the price we'll be using. 1,000 shares are taken from 2019. Remember, 2019 we bought 4,000 shares, and at the share price where we bought, right? So the total purchase price is €3,500, and that calculation is 2,000 shares by €1 is 2,000, and 1,000 by 150 is 1,500, right? You add both of them together, you get 3,500. The sale price, you sold the 3,000 shares for €5,000. The cost of the shares using first in for FIFO is 3,500. You have a chargeable gain of €1,500. 33% of €1,500 is €495. Now again, this is without personal exception. If you do personal exception, it's going to be about €75 per capital gains tax. And also remember, if you sell, for example, if you use all of your personal exemption in one go, for example, in this case, you would use all of it. The next time you sell shares, you have no more personal exemption. It's per year, and it doesn't keep recalculating every time you sell shares. It can only be used once per year. Taxes on shares are very, very complicated. It's very hard to find this information, and I will put some links in the description under the like button for the revenue.ie on some more examples they give and some very detailed examples. They also go into other things which I don't go into here, such as losses, and they also go into basically if you get free, because sometimes you get free shares from companies, like they give you bonus shares, and it's how to calculate that into your cost of your shares. I hope you enjoyed the video, and I hope this was helpful for somebody out there that's wondering the tax on these shares. Again, I'm not a financial advisor. If you have any questions, post them in the comments and I'll do my best to answer. Until next time, bye.